My goal with this video is to stop as many new or struggling traders out there from blowing another account as I possibly can. So if you want to help me with that message, please do me a favor, give this video a thumbs up down below, and hey, subscribe to the channel if you are new. Today we're going to be talking about stopping blowing your accounts, or how to stop blowing your Forex accounts, stock accounts, whatever you're trading. I'm going to try and give you my top tips on how I can reduce the chances of blowing any sort of account. So stay tuned. Let's go ahead and get into it right now.
Nailed the thing. Okay.
Hey traders, welcome back to my YouTube channel. My name is Nick, and on my channel, I like to talk about trading and investing in a realistic fashion, which today's video has to do a lot with that topic. How do you stop blowing an account? How do you there's a lot of traders out there who go account to account, just blowing it, not knowing how to stop, or they are addicted to trying to make a bunch of money quickly, and they continuously blow accounts and they lose money that they really cannot afford to lose. It's a really sad reality about markets in general, is that a lot of the really experienced money-making traders out there are making money because there's a lot of dumb money in the markets that just keeps losing their money over and over and over doing dumb stuff. So how do we stop blowing accounts? If you're a new trader and you're struggling with this, the number one thing that I would encourage you to do is stop trading a real account first of all. The first thing you should do if you are blowing an account is you need to stop trading with real money for a moment, okay? I know a lot of people out there say you should never do demo, and that demo is, there's no emotions attached. But if you're losing money, the dumbest thing you can do, in my opinion, would just to be continuing to do what you're doing that's losing you all that money. I don't know, it's kind of a simple concept, but I think it might help. Stop trading real money if you're losing a bunch and you are just blowing account after account. Because there's some things that we can talk about in this video. I'm gonna go through some steps, some of the practical ways I think is the best way to reduce the chance of actually blowing your account. Now, when people come to Forex, they want to make a lot of money. This is pretty apparent to a lot of new traders. DMs after DMs and emails after emails I get that people are saying, I want to change my financial future. I've got a few $100. How can I make it into $10,000 short time? If you want that sort of thing from Forex, go to someone else's channel, because my channel is not about that. I am not a big fan of treating Forex like a big casino where you're gonna take $500 and turn it into 10 grand in a week. That's just not how I play this game. I play this game like a business. I make slow and steady gains on my account, and I have a good bit of capital invested to make the money that I make. That's the reality, and it's not fun for a lot of people, because a lot of people want to take their small amount of money and become wealthy off of it, which, I can respect. I respect the hustle, but Forex to me is just not the place to do that. Forex is full of unexpected twists and turns, and markets can do all sorts of things. If you think a market is trending down and you're short and then it just suddenly spikes, you can get yourself into a lot of trouble, especially if you're trying to make big money, because you've got big positions on your account, and something like this can stop you out like crazy and make a really tough time for your trading account. So if you're blowing accounts, what can we do? The first thing that we need to do is stop worrying about making a bunch of money, because honestly, I've said this 1,000 times on my channel, and I'll probably say it 10,000 times more. The biggest root of people losing their money, or the biggest problem in my mind, is greed. People want to make a bunch of money and they want to do it fast, and they don't want to put in the work, okay? And when you tell somebody that, to make big money in Forex, it might take years of experience and capital invested, that is not appealing to the new trader. And I understand that a lot of marketers and salespeople out there, they go the opposite. They say in a short period of time, you can make a lot of money with Forex, because they know that they can sell you something that is not realistic. If you're looking for that sort of stuff, you are just not going to get it on my channel, because I don't believe in that. I believe that is immoral, and I believe it's wrong. I believe if you're going to sell a product, it's got to be down to earth, it's got to be realistic, and it's got to have some sort of factual backing with it, track records, that sort of thing. Regardless, if you're blowing your accounts, this is a serious problem for you, and you need to stop doing it immediately. How can you do it? Again, stop expecting to make a bunch of money and reduce your position size. If there's one thing that you take away from this video, if you're going to be trading with real money, take your lot size and significantly reduce it. Now, I know a lot of people will say, well, if I reduce my position size, then I'm not gonna make that much money. But first of all, you would actually be surprised what a 0.01 lot size account or trade on an account of $1,000 can actually do, especially if you're a swing trader and you get the hang of it and you catch some good moves in the market. Even 0.01 can cause some nice gains on your account. Which brings me to the next point. Gains are a very, very controversial subject. Remember, on my channel, I give you my most honest answer to these questions that I possibly can. And so when I say that I go for something like 20 to 30% in a year, a lot of times that makes people really upset because they've gone from different channel to channel who say, oh, I can make that in a week or a month. I would ask you real quick, to whoever you saw those people posting those sort of gains, do they have a MyFXBook account that has months and months of track record, or is it just they're saying that and they don't really back it up? Because again, my experience in markets, I've been doing this 5-6 years now. I've met a lot of great traders, and I've had the chance to meet and speak with a lot of professional traders who, are still retail traders but making great money, and they are not shooting for 100% per month or anything crazy like that. They're shooting for slow and steady gains on a large amount of capital. Now, that's the big thing that, again, not a lot of people want to hear, because if you're blowing accounts and it's because you want to make a lot of money very quickly, then you don't want to do small lot sizes because you want to make a lot of money, right? And there's nothing wrong with that per se. Everybody wants to make more money, and I don't think that that's necessarily wrong. I think that it can get us in trouble though when it comes to Forex. My big tip is reduce the position size no matter what you're doing. Let me tell you why. A lot of people out there, they do trade with stops, they do trade with risk management, or they try to, but they don't realize that their position sizes are way too big for their account. If you're risking 10% per loss, which a lot of new traders are. A lot of new traders, they're trading on something like $1,000, and they're risking 100 of those dollars on every single trade, right? So they're trying to go big, right? And they think that by doing this, okay, I'm risking $100 per trade. Very quickly, I can go for $200 per trade, and things can go really well. Well, in theory, this is okay until you actually look at some of the mathematics behind this. Okay, so if you have $1,000 and you're risking $100 per trade and you're going for $200, right? That gives you a 2-to-1 reward to risk, right? Okay, that's decent, but this is where people mess up, is because they're risking a large portion of the account. They're actually risking 10% of the account on every single trade. It doesn't take long to seriously rack up some big drawdown on your account every time you stop out. For example, if you actually stop out 1, 2, 3, 4, 5, and you're risking $100 per trade, right? And so you have 1K, and this is 100, 100, 100, 100, 100, right? So if you lose that, 1, 2, 3, 4, 5, that's minus $500 on your 1K account. And a lot of new traders are trading like this. They're taking their $100 per risk, and they very quickly, they take 5 losses in a row. Because guess what? Even experienced traders can take 5 losses in a row. This is completely normal. In fact, I had 5 losses in a row just the other week, I guess, and we bounced back and it was okay. But 5 losses in a row surprisingly will happen at some point or another. And if you think it doesn't or it won't, you might be unpleasantly surprised. So we have to be aware of this. This is the downside of Forex, and this is the downside of trading in general. We have to be aware of these sort of things happening. And drawdown is part of the game. There are times when you just take losses. It doesn't mean you're a terrible trader if you take losses. It just means that you're going through a losing streak. Losing streaks happen, right? If you have a probability of 60% win rate, even a 60% win rate, every once in a while, you're gonna have a series of losses. That 40% of the time that you lose can happen to rack up 3, 4, 5 times in a row. And so if you lost 5 trades in a row, risking $100 each, you are now at a 50% drawdown on the account, which now makes it very, very difficult for you to recover back to your 1K that you initially had. And even worse, you're getting closer and closer to completely blowing the account and losing everything. So what's the solution? If we are trading with a 1K account, my solution personally would be to risk something like 1 to 2%. I'm sure that you have heard this, or at least I hope you've heard this. 1 to 2% risk per trade is much better if you're using a stop, right? Because then you've got this, right? If you take 5 losses here, right? So let's say you risk 1% of $1,000, which is what? $10, right? So you've got 10, 10, 10, 10, right? We're looking at the worst case scenario because it's very important to do. So we have 5 losses at minus $10 a piece. Now, of course, this is not ideal, but at this point, we're only down $50 on the account, and this is a drawdown of 5%. Much more bearable, and we have plenty of room still on the account to build back our losses with a couple good trades. This is the key. It doesn't matter what your strategy is, if you're trend trading, reversal trading, if you risk large portions of your account or you put your account on the line, you are vastly more likely to blow an account, which is the whole point of this video, is to stop doing that. So if we reduce our position sizes and reduce the risk on our account per trade, this is where we can basically have less intense or extreme drawdowns. And that's really where things are going to be, the solution is going to be, right? Is reducing that drawdown and making it so that when things are bad, they are not horrible and things are not going to end in our account. But you might be saying, well, Nick, if I only go for a $20 gain on my $1,000 account, I might not make that much for the month. I might only make a couple percentage per month, or I might make, $100 or $50 in a month, and that would actually be a decent month. And the answer to that question is correct. You are right. That is the if you were following along and you were saying all the things that I was. But assuming you were, you would be correct, right? You'd be up 50, $100 in a month, and that would be a really good month on a $1,000 account. And again, that's not a popular opinion out there in the world of Forex, but it is my opinion after years of doing this. I'm still here. A lot of people have come and gone. I've seen hundreds, if not thousands of traders quit, give up because they're trying to go big. They're trying to double, triple their account in a short period of time. If that is you and you're struggling with blowing accounts, at least consider what I'm talking about here today. Reducing those position sizes, being more slow and steady, and understand that this is a long game. So although you might not make a lot of money in a short period of time, the long term, if you are depositing to accounts, if you're building the account size and you're mastering your skills as a trader, 1% to 2% risk can actually yield, some really, really nice months and even years of trading returns that can be compounded and built. And that is where the real magic of Forex or trading and investing in general is. It's compounding gains at a stronger and stronger rate over time. So I hope this was helpful to you guys. Stop blowing your accounts. If you're blowing accounts, get off a real account, get on a demo for a little while, test things out, figure out what's going on. Or is it your risk management? Is it your strategy? Whatever it is, figure it out, isolate it, and then start to go back with real money. This is just my opinion. Get back on it with a real account and test things out and see how it goes for you. Guys, thank you very much for watching. I hope you enjoy this video. And if you did, make sure to give this video a thumbs up and subscribe if you're new, and we will see you back in the next one.